Hi, Elisabeth Dawson here again with Ways to Love Your Money, and we are welcoming Jonathan Olow to the show. He is our real estate expert, and he's going to share with us some information today, as we kind of alluded to, about what's the importance of having home ownership with homeowners insurance. So, Jonathan, I know we've talked a little bit about this, and we know that we kind of have to have homeowners insurance, but, you know, just to close an escrow, but that's only if we're financing, right?
Correct. Well, it's like any insurance program. I mean, you're going to educate people about different avenues, but for your home, it's like the medical for your home, because there's going to be things that are going to go right, wrong, and different, and a lot of things you don't have control of. Pipes bursting and things like that. And I do want to talk about that about putting claims on your home and why you pay a higher deductible instead of a lower deductible. So we can talk about that, what the payoff is.
Well, I think it's important to kind of draw the attention to that because, you know, people, you're purchasing one of the largest financial expenses in your lifetime. You think it's your number one investment, but it's kind of a liability until we actually get it paid for. And there's still liability with that too, because we have not just homeowners insurance, but then we have property taxes, we have deferred maintenance. We, if we've spent and saved so much money to be able to acquire this home, now what do we want to do in regards to protecting it? Because insurance is about protecting what you've just worked so hard to acquire and build, and then you want to have over the years. So I think when we talk about that too, Jonathan, because people ask you, as they ask me as well, you know, should I have earthquake protection? Should I have flood protection? And what are your thoughts on it? I have my own, which we've talked about them in periods.
So having the basic, yes. We live in Southern California, so you know there's going to be fires. We're looking out the windows and there's eucalyptus trees and pine trees. So there, eventually it'll happen again. We know it will. So having that for having the protection.
And we're getting into fire season, so we're getting into those Santa Ana's here very, very soon.
Yeah. And if you're going to get flood insurance, it really depends on where you live. There's going to be rivers that have never had a flood in them for 1,000 years, but they call it the 100-year flood. And so your title company will say, hey, we want you to get flood insurance. And so that just adds a little bit of cost on there. And if you live in a high fire danger area, they, some places won't give that to you, but you go to the state of California, and again, you pay a little bit more of a premium. You're going to complain about it, but if your house burns down and you get nothing, then at that point that's
called the California State Fund, correct?
Correct.
Okay.
Correct.
So a lot of people don't even know that that's an option, the California State Fund, because if you're having a difficult time, so I live in an area that's very wooded. It's by the National Cleveland Forest, and it's very expensive to get insurance up there, let alone to find anyone to insure my home. But it's a very big purchase for me, and I want to make sure all of my collectibles in my house, not just the roof, not just the walls, not just the driveway, are protected, but everything that I've worked so hard to build. And we always talk about drywall in and protecting that drywall in. So people will say, gosh, do I need to really insure my clothes? Well, if they all burn down, you might want to consider it, but it might be your furnishings, it might be collectibles that you have in the home, it might be artwork, it might be, just even the cabinets on your walls. That's important because you're going to replace it the way you want to replace it, not the way necessarily.
Correct. And I'll go back to another point, is that when you're actually looking for a home, if those are going to be deterrents for you, then we're not going to go look in those neighborhoods, because if you're unwilling to pay an extra $20 a month, well, one, you probably shouldn't be buying a house if $20 is an issue. But those are things that we can look at. If a lot of homes here have shingle roofs, so there are some lenders that will say, no, we're not going to close this deal unless the seller pays for a new roof. That's $20,000. So we'll kind of look at those things that could pop up, or they require you to replace it in a certain period of time after you close escrow. Otherwise, they'll cancel your policy.
Isn't that something that they can cancel your policy, and now the mortgage company is going to come back after you and say, hey, you have to have it.
Go find it. So then you're going to pay double the amount, because you always get it. You're just going to pay somebody.
And I know we were talking before the show started, but you do have an option. If you paid for your house in cash, you don't necessarily have to have homeowners insurance. But why would anyone want to risk that?
Yeah, that's true.
Why would anyone want to risk something you just spent $500,000 for and you don't even have any insurance for that? That would be a bad day. that would be a bad day. So I look at those things and I go, okay, well, I look at my list of questions to ask, what's the point of homeowners insurance? It's the full replacement.
Correct.
We want the replacement of those assets.
And we mentioned briefly deductibles and what that is. So when
Right.
you're putting in a claim on your car insurance, you have a deductible of $500 or $1,000. If you have the higher deductible, means that your monthly rate will go down.
Right.
So with a home, you want that to be as high as you can. And the reason you do is because before you're going to call up the company and do a claim, you might want to just write out a check and say, I'm going to just pay for this for $1,500
Right.
or $2,000.
Right.
So the higher that you get, it just keeps you from making more claims, because if you make multiple claims, the insurance company is going to drop you. And when we talk about water damage, that's another one. People are quick to say, they have a leak under their sink and they call the insurance company. No, you need to assess it beforehand to make sure, because if it's a $500 fix,
Right.
pay for it.
You don't want this ding on your insurance
they hold
record.
they hold it on, personally, I
Yeah.
know this.
Okay.
It stays on your policy for 5 years, and if you
that
have
right?
multiple, and you think, oh, I'm going to change insurance companies, no, they all know it.
Sure.
So when you sell, let's say you
So
sold
it's like a credit rating for insurance
it
companies.
is, and when
Okay.
you sell your home, that can come up on the title report. They'll find it, and it says, they ask, do you have any claims? And if you're going, no, I don't,
Yeah.
it will pop up, because that person buying your home is buying that liability.
Right, right.
So-
And the older the home, but not necessarily, but the older the home, we usually have more risks for
Yeah.
things like that, right?
Like
Yeah.
our bodies.
Yeah, just
So-
like our bodies. Well, sometimes people ask about earthquake insurance, and kind of like with flood insurance. In the state of California, we are prone to earthquakes, right? But how we kind of view this is that if the government said it was a mandatory thing, just like owning homeowners insurance, they would mandate earthquake insurance too. And there are certain areas in California that they say you have to have it, or you have to have certain flood insurance, but they don't mandate it for everyone else. Just think about this, and Jonathan, chime in anytime you want. But for homeowners insurance that's for earthquake related, when on average it's a 15% deductible of the value of your home, not many people have a couple $100,000 hanging out to pay for that deductible if we had a huge implosion because of an earthquake.
Yeah. Well, I personally just got it for the first time.
Okay.
I've been owning properties this long. And I learned that if you have an earthquake, or not that we would have an earthquake, if an earthquake happened and your house, went to hell, or
Okay.
went wherever
Just
it goes,
crumbled,
crumbled, then of course you're not covered. But also, if you have a pool on your property, is that if you have an earthquake and you don't have earthquake insurance, that pool, which could be $50,000, which is a big ticket item, won't be covered. So you just have to understand that, it's a cost of, and it's not really that expensive. I think our parents all were like, oh my gosh, it's so expensive. But again, it's just like insurance.
Well, and the cost being lower means that, with the deductible being higher, but if you're kind of measuring it and you're in an earthquake zone, maybe that's very wise. But again, if everything crumbles to the ground, we've got bigger problems to deal with, right? But it's to be mindful, especially if you're by those earthquake centers. That's something that you want to be mindful of. And if it gives you peace of mind, then by all means do it. Yeah. Just understand what the cost is involved. Now, we were talking about something earlier too, and with your homeowners that you have, that you represent on, purchasing a home, or you're even selling, you recommend something called a home warranty plan. Most people think, oh no, that's my homeowners. Well, it's not necessarily my homeowners, but a home warranty insurance plan. What do you think is the importance of that? What do you think is great about that?
Well, typically a seller will pay for that for a buyer in the
Okay.
first year. Then the next year you'll get a reminder in the mail, do you want that? And
Sure.
it typically is a little more expensive.
Okay.
But again, it's sort of like having a property manager kind of person. It's a lower cost. You pay $65, $75 to have a service provider come out. But you have to remember, not everything is covered. You go through the pamphlet
Yeah.
and it says, this is not covered.
Sure.
But what they're actually doing now is the home warranty companies are asking the buyers to submit their inspection report. So you think you're going to get a new heater and a new air conditioner, but when they look at your report and your inspector said, at end of life, then they're going to say, no, you're not getting
Wow.
it. So
Wow.
don't assume it's going to happen. home warranties are really great for people that have rental properties too,
Sure.
because it's kind of like a mini property manager. You can say, hey, renter, if that happens, go ahead and call, pay the $65 and I'll take it off your rent, or you will just pay for it another
Well, and I've
time.
seen it personally where it's affected me for air conditioning units. Even my father, they paid to have it replaced. It doesn't necessarily work like that with all home warranties, but
Yeah, it's like being at the carnival and you spin the wheel and hopefully your number comes up and you get it done.
Right.
And I've had things paid for and I've had things rejected. And it also is who that inspector is, because they work with the home warranty companies. They assign a plumber to come look at your home. Well, what if he writes something bad in the report, or he writes the wrong word, like the word mold? Well, he's not a mold expert.
Right.
So one that happened to me was, he said rodents went into this machine and chewed the wires. Now, whether it happened or not, we don't know, but things like that, and say, boop, denied.
Well, now if they're using that as a document that they want to kind of verify if there was no problem before, but now the insurance is there, and they want to say they want to make the claim or not, or pay the claim. Yeah, that's kind of a concern. But it is kind of a peace of mind for someone that's selling their home that they can actually do this, so that if something, the oven stops working, or the fan belt. I mean, I don't know, all those different types of things.
You mentioned that. So somebody that's listing a property, let's say that they gave up their home warranty, 5 years ago, they don't have it. You can actually pay a daily rate to have a home insurance. Not home insurance, home warranty. So if something broke during escrow, that's going to be taken care of for the most part, if it was working before. But that's kind of a little assurance to this.
Do most real estate experts know this? I mean, what an advantage to have you kind of represent those types of people that you have been working with, so that they know that those are tools to put in place.
So you don't have to pay the whole month. It's just kind of that insurance that if something, because it always is the last day before you're ready to close escrow, the buyers walk through the property and the light's not working, and you're like, what do you do? So at least it could be carried over and taken care of after.
Brand new properties have problems. 10-year-old properties have problems. 50-year-old properties have problems. So I think that's a good peace of mind type of insurance to have. And again, for people that continue to have that, and now it's time for them to pay, the next year because the seller paid for it the first year. Do you recommend that those people continue to kind of keep that on as kind of a insurance?
First-time buyers, it probably is a good idea to do it a few years until you learn what you're supposed to be doing. So I would recommend it for new buyers, but somebody that travels a lot and they, a neighbor they call a neighbor and say, hey, can you meet the plumber or the electrician there that is going to be doing the inspection. But I was going to mention another, because we were only talking about houses, but there is condos and townhouses. And so that policy is called an HO6. A lot less costly for the homeowner because you're only taking from the walls in that you're going to be paying for, because the association, the homeowners associate, has insurance policy for the outside the building, the roof, and things like that. But you still need to, protect your contents and, have insurance for people that come over if they get hurt, all of that. So,
well, even if we could break this down to even someone that's renting, renting an apartment, what's the point of, having homeowners insurance for renting an apartment, or renter's insurance, if you will? Well,
and that's a whole different category. So that's usually a lot higher because you're not able to control that renter. But as a landlord, you should always request your renter to get personal insurance, but there's also like a liability, because if they have friends over to the house and they get hurt, you don't want to be sued. They should have a policy that is protecting them, or whatever.
Or let's say they just left their laptop out, and they have a little Apple laptop out there, and someone sees it through a window and wants to take it for their own. I mean, those are risks.
They should protect themselves.
Yeah, and they don't even know that they can. So I know with your clients, you kind of walk them through this structure, walk with their property and casualty insurance people, just to make sure that they have the right piece that's protecting this big purchase of real estate that they're making in their lives. And it translates from either home ownership or investment property, or even condos, things like this. So I think it's wise for us to have this conversation and to know that even home warranty is something that needs to be considered too, and it just needs to be budgeted for.
It's just part of the package.
Just part of the package.
And on the one of those notes you had mentioned, so the insurance, when you're in escrow, that's all part of your investigation period. So if you've got 12 days to investigate the property, part of that is, can the house be insured? But it's also, some people will go off and look at 10 different companies. But just remember, if you get one insurance company and the day you close escrow you want to change, you can change. So all it is get something in place. Don't focus on, oh, am I getting, sure, you want to get the right one, but if you're like traveling and you've got all kinds of stuff doing, then go find a major company that won't name names, but they're there, get the insurance, but you can always change it. They'll just write you a check for the portion that you didn't use. So it's always, you're always able to change it, so you're not stuck at that moment.
Well, as always, when you come on the show, I'm always so grateful for this opportunity and time, and we're giving such great education and knowledge to people, especially when you're going through the home purchasing or home purchasing event, or even selling a property, to how to protect yourself. And you just don't want to have something come back and bite you and not be prepared for it. So think about these things. These are major topics, and no one's really talking about them out there. They kind of just get their homeowner's insurance for when they purchase their home, and they never look at it again, and it's been 10 years later. So it's something you always want to revisit, probably every year to every 2 years, just so that you know what you have as the value of what you want to protect is protected. Because what is insurance at the end of the day? It's replacement value. It's replacement for everything you've worked so hard for. So again, Jonathan, thank you so much for being on the show. I always love having you here, and thanks for being a big partner of the show as well. So stay tuned next week for more of our podcast, Ways to Love Your Money. We can't wait to get your feedback, and we hope that you call in with some of your questions. There is a client that I wanted to bring up as a story, and this story was actually back before 2003, so this was taken way back. But this was a couple. The husband was an attorney, wife was taking care of the family, but they were getting close to retirement. And the interesting story here is, it was, when we first started working with them, it was about 2001. And one of the things that we suggest for people to do is to do back then it was taking out a video camera and recording everything, all the contents of your home, because you need to have proof for that replacement cost to actually kick in. So if any of you lived in San Diego County in 2003, you know that we lost over 2,500 homes at that time. It was a firestorm of all firestorms. But what ended up happening is that these clients, they were actually on vacation. And the sad part of that truth is that their home burnt down to the bottom. So they lost all family pictures. They lost so many different heirlooms, things of this nature. But what we had done back in that time is we would take a copy of that, that VCR tape, if you will. We would have a copy of it here in-house. Today, we obviously know that technology is advanced, but they also had a copy of that tape in his office. And so what ended up happening, which was kind of a very sad, devastating story, we'd gotten a phone call over the weekend, and then by Monday, there were all those little huts hanging out there, all these little tents, and the wife had gone, and the reason she was calling is because she put her claim in to have her homeowner's insurance replaced for everything. And she had called in the beginning and saying, well, the insurance company's not going to cover my personal belongings of $300,000. All they're going to recover for me is $50,000, but I have to show proof of the difference. So what she did is, that Monday, after she had already dealt with all the insurance carrier information and all those tents, she called in and she said, I'm fine. I've got the recording. I've already given them. And I said, here's your proof. And that proof of just that one VCR tape was the difference of her getting an additional $250,000 to be able to reset life and do the things that she needs to do to be able to rebuild. And again, this is back in 2003, so you know that we've advanced even more so now. And I don't have my phone with me right now, but you pick up your phone, you do a video of your entire contents of your home. You talk about on that video what you paid for things, how much it costs, and you don't keep that in your just in your phone. You put it on your cloud, you put it in your server, somewhere that's not just at your home. So if your house burns down, you have proof, because proof is what you need in a major disaster type of situation. You want that $250,000 given to you, and not just $50,000 is where they're going to cap it, because you've got to show the proof. So think about that, take it to heart, and if you haven't done that, take that as a tip of the week too. I know we give lots of tips out there, but do a video archive of everything you've worked so hard for to build in your home to make it yours, so that in the event that house burns down to just a little speck, that you actually have proof to show that all those things need to be replaced. Again, stay tuned for next week for more of our show, Ways to Love Your Money, and we can't wait to get your feedback. Call us at 619-640-2622. Take care. This show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.